Action to Volcker than normal.
Well, ladies and gentlemen, welcome back. We have 2 more weeks before I take a break to join my wife on a trip to Europe.
Oh, goddamn you!
I don't know what we're going to do about him. Something's wrong.
Don't worry, Ed. Don't worry, Ed.
Okay.
Okay. He's out.
Okay.
Let's
Anyway,
go.
so if there's anything that I would hope that you've gotten from this series of lectures so far, as we've gone through the economic cycles in the 20th century and even look back a little bit further, there's kind of 2 things that have always struck me as very evident. One is that nothing that government has done or not done has been able to eliminate these cycles. They come and go. There are shocks to the system that cause the cycles to come earlier, to have a greater depth and duration, but they've been with us. And my perspective is that, shared with those who embrace Henry George's perspective, that understanding property markets and land markets and the relationship of tax policy to nature, to land and natural resources, is integral to solving the problem of repeating economic cycles. And until we get to that point, we're going to continue to have them. There's at the end of this course, if you're still with me when I return from Germany, we'll go over some of the ideas that I have about what needs to be done to mitigate. Even if we had the full collection of land rents and all its forms as much as possible, we still wouldn't have a perfect world. We'd still need to have certain other reforms that would need to be put into place in order for us to really have not just a full employment society without inflation, but to have a lot more social harmony in our existence within our society and between societies. So we have a long way to go, in my view. Focus right now that I have here is on economic cycles, but certainly there's a lot more that needs to be discussed. So going back to the 1970s, this was the time of a lot of problems with the Middle East, with the supply of oil, with the development of OPEC, with inflation really just going out of control. And Paul Volcker, as chairman of the Federal Reserve, thought that the only solution that he had was to orchestrate a recession. So he actually had 2 recessions in fairly brief order. He set interest rates on an upward climb beginning in late 1979, raising the Fed's interest rate to 13.7%. A couple months later, it hit 17%, and in 1981, neared 20% several times. So it's interesting to me, and the corollary to our current moment is, if you're an investor, if you have savings, you have been feeling really left out in the bond market but yields on those bonds and on government securities have been so low. Can you imagine what it was like, in 1980 or in 1981 to get 18 or 19% return on a fully insured government bond? I mean, this is unbelievable when you think of that side of the equation. If you're a borrower, of course, it's extremely expensive and it's costly, and it does have the effect. But no one ever talks about all of the wealth that was transferred to those individuals, those households that had sufficient savings to invest in government securities. As those rates of interest increased, of course, the demand for credit slowed considerably. Prices of goods and services began to come down as overall demand fell. Economists declared the nation in the first brief recession in January of 1980. Interest rates were lowered a little bit, and then inflation reignited. So, interest rates had a role, of course, but it wasn't the only variable that needed to be changed. And so the second tightening occurred as the second recession occurred just a little bit later in July of 81. And the official unemployment rate reached and then passed in December of 82, 10%. Now, again, this is the official rate as calculated. So what the real rate of unemployment was could have been anything between 10 and 20%. It all depends on how you determine who is unemployed. If you're called and you say, I'm no longer looking for work, I'm not working, but I'm no longer looking for work, you're not counted as unemployed. Only if you're unemployed and looking for work are you in that basic statistic, which is, somebody made that decision. And I guess, some people do stop looking for work because they don't need a job anymore. But how many of those are in that number? Anyway, so as those interest rates increased, a lot of other things were happening. Didn't mean to go ahead. The agricultural sector was at the same time hit pretty hard by declining commodity prices. There was record production at the time, so there was a glut in farm commodities. This forced prices down. And this glut, combined with a U.S. export decline of about 20% between 1981 and 1983. This was following the 1979 Soviet Union embargo. That caused farm debt to hit a staggering $215 billion by 1984, double what it had been just in 1978. So farm sector is in serious trouble. Revenue is way down, debt is way up. And so agricultural land values started to fall by up to 60% in some parts of the Midwest between 81 and 85. And of course, farmer bankruptcy surged, which is why our country western and rock and roll groups put on farm aid to raise money for the distressed farmers. In just 1 year, 1985, 62 agricultural banks failed, and over 250,000 farms were lost to foreclosure sales during that decade. So history again repeated, in the 1970s and 80s, and no one seemed to understand the role of land speculation, the role of rising land prices in all of this. Now, as bad as it was for white farmers, the loss of farms owned by Black farmers was 5 times the average. Was this because they were bad farm managers? Well, investigations of prejudice at the U.S. Department of Agriculture resulted eventually in a giant lawsuit, and the Black farmers were awarded $2 billion in 1999. The USDA managed not to pay most of it until 2010. So very few of the farmers that were affected recovered their farms, which is really a tragedy in terms of public policy in what we think of as a democratic republic. However, on the plus side, procedural changes adopted at the USDA after this lawsuit slowly resulted in a gradual increase in the number of farms that are now owned by African Americans. So there's been about a 9% increase in the number owned by Blacks, a remarkable increase in the number owned by Native American farm operators, something like 88%. And Hispanic farm operators have also had an increase. So more and more minorities in the United States are at least getting an opportunity to get back into agriculture. And in each case, the number of women farmers within these groups has also increased significantly. On the other side, I would have to say that the average size of these minority-owned farms is about 140 acres. So they're not huge farms, but at least it's putting many, many more farms in the hands of what you would call family farmers, and keeping it to a degree out of the hands of corporate agriculture, agribusiness interests. Farm incomes slowly recovered from the 1980s lows. Here's a chart that basically show you that. Total agricultural debt dropped a lot by 30% between 1984 and 1990. In part because lenders, the banks that went out of business, and the government agencies that took over those banks wrote off a lot of bad loans, and other farmers were able to pay down their debt. And finally, land prices began to stabilize and began to rise again. I mean, this is consistent with every one of these cycles. You know, the land market bottoms out and then slowly attracts investors back, purchasers back, and land prices start up again. And there's this new round of optimism that, oh geez, you know, the bottom is over. We're back on a positive side. And so exuberance, whether it's irrational exuberance or not, starts to come back into the market. So by 1992, unadjusted for inflation, the prices had roughly regained their 1984 levels. So here we get back into an upward cycle. Well, what else is going on? Well, at least in the United States, what we're going through is just an unbelievably rapid, sprawling development around every major city. There's not much resistance to sprawling growth. You might have a city like Portland and it establishes an urban growth boundary, but that's not the case for most of the cities in the United States. So sprawling development is slowly becoming a concern of the planning community and by city officials because they're losing their tax base. People are moving to the suburbs in massive numbers and leaving large sections of the cities, you know, semi-empty. Then at the same time, these subdivisions, these new towns are taking up a lot of what was once fertile agricultural land in temperate climates. What did this mean? It means that food would have to be grown where water was naturally scarce, then shipped or trucked hundreds or thousands of miles before finding their way onto store shelves. So we're getting, you know, in the 80s, by the 80s, because of all this development and movement of people, we're now getting to a situation where the local economy is not producing the goods that most people are consuming. And food crops in particular are having to be shipped on railroad cars or in refrigerated trucks, a much more expensive way to do things. And it's all built into the economy. So while this is all going on, there are some of us who are arguing the case for land value taxation. And hey, you know, if we're concerned about sprawl, if we're concerned about the loss of our agricultural land, we ought to be looking at this idea of publicly capturing the value of location rents. And so there's, you know, some studies are done, but the experts are very, very slow to embrace and then advocate this you know, kind of foreign concept. And studying the history of economic theory, you know, tells you why. They're wedded to one of two basic theories. Marxian economics in the United States is rarely discussed. It's taboo because it's associated with communism. So what do you have? You have Keynes and you have Alfred Marshall, and you have, neoclassical economics, which ignores the land market almost altogether. And then you have Keynesian economics that doesn't really focus on land markets either, and is totally focused on measures to control demand. And then by the time the 1980s is coming to an end, we start to hear more and more talk about this new renewed interest in supply side economics. And if you look at the writings on supply side economics, again, nothing about the land market as a separate, distinct market that needs to be analyzed separately. I actually was in graduate school then, and in a response to an economics course I was taking at the time, I wrote to the economist Art Laffer about his ideas about lowering the marginal tax rates. And I very directly asked him, how he thought about Henry George's idea and why that wouldn't have a more direct effect. He wrote me back a long letter, and basically he said, well, I think that what I'm proposing, lowering the marginal tax rates on income, is very consistent with Henry George. And that's about all he had to say about it. So the new economics that was coming into play in the United States had nothing to say about the fundamental problems that was causing the economic cycle, at least from my perspective. So even so, while this is all going on, it's kind of remarkable. Here's a chart that shows the average market price of locations for building. And the land costs as a component of total housing costs remain fairly moderate during the first 2 decades of this population migration and the creation of the new suburban communities. The real climb began when the baby boom generation of the late 1940s, early 1950s became young adults during the late 60s. They moved out of their parents' homes and they started to form new families. And so they had a demand for what we call first-time home buyer housing. And so you begin to see some alternative housing styles being built, the first townhouses and condominiums and that kind of thing, attached housing. Whereas the first phase of suburban expansion was all single family detached. People were tired of living in the cities in close quarters. They wanted that little piece of ground behind their house. But by the time the baby boomers became adults, that was no longer affordable for a lot of them. Land costs, as this chart shows you, was starting to climb. And so developers had to take a different tack. They had to go to communities and ask for increased densities in their zoning. But all along this period, property market is a central driver of the economic cycle. It's land prices driving the development patterns, and then the migration patterns. Eventually, to a degree, people started to think about, well, maybe the city's not such a bad option anymore. The suburbs are now becoming more expensive than I can afford. And I'll get into that in just a minute or two. The first housing subdivisions that were constructed after the Second World War, they were places like Levittown and outside on Long Island in New York. And there were Levittowns that grew up all over the United States with the same basic housing stock, all pretty fundamental and basic. By the mid-1960s, there's a new dynamic, because now you have more educated people, more college graduates, more scientifically trained people making higher incomes. And they obviously wanted housing that had more amenities. And so the homes that began to be built in the mid-1960s increased in size, developers offered at least several models to choose from. And it was less likely, and there's stories about this, that in Levittown, where somebody after work went to the tavern and had a few too many beers and went home that night and tried to walk in the neighbor's house because they looked so much alike that they couldn't even tell their own house, and they just walked in, and the neighbors, if they didn't know them, they probably called the police. But that happened, more often than you would like to think. Now, here's something that, from my experience in real estate development, as a general rule, builders will acquire land and begin construction when they can sell the finished property for at least 4 times what it costs to acquire the land and prepare the site. If they're well capitalized, they can do a whole lot better than that by taking options on agricultural land that they exercise later, or land banking land that's on the fringe of a city or a fringe of a suburb, and hold it for a good long time, even leasing it out to farmers so it maintains agricultural zoning. But by the 1980s, rising land costs really required a combination of strategies. One was larger homes on smaller building lots, increased density, including, as I said, attached townhomes, and then multi-story condominiums, cooperatives, and apartment buildings. So you start to see the physical look of suburban communities start to change with the addition of these multi-story buildings, and in more cases they start to develop what you might call town centers. But this graph here, this chart here, really shows you, how much increase there was in land value in a fairly short period of time, and the economy had to absorb this. And so, on an individual level, if your income, your household income, is increasing each year at a rate equal to or greater than the increase in land value, well, you're probably okay. The same way, if your household income is increasing at or greater than the rate of inflation, you're probably okay. But in the United States, what's also going on right now, it's the beginning of the demanufacturing sector, where more and more manufacturing entities are moving south or moving overseas. And so you have a loss of manufacturing employment, which is high income employment. And we start to see some of this. Many of our towns and cities with sections that look more and more like this. As the 50s came and went, urban homeowners turned over old housing units to investors and left for the suburbs or to retirement communities. Residential properties in neighborhoods that were populated by lower income households were frequently divided into several apartments, which allowed the investor owner to maximize cash flow and depreciate the property for tax purposes. And of course, often because they didn't look at it as a long-term commitment, they failed to properly maintain the properties. The community comes in, they declare the property uninhabitable, they condemn it and board it up, and maybe it's broken into by squatters and burned down, by an arsonist, who knows. But I mean, this is still the case in the United States. We have neighborhoods like this in almost every major city and many smaller cities. The work that some of our colleagues, my colleagues, and some of your colleagues are doing in Baltimore right now, trying to reverse this trend. It's just tragic how these cities have been wasted, and they've been wasted by the ability for people to acquire these properties for purely speculation purposes, sit on them for years or even decades empty, waiting for a public-private partnership to come along and bail them out. Some of the work that I did in Philadelphia, it was really amazing to me in the 90s. Not surprising, but amazing. When we would identify a neighborhood for revitalization and bring in financial partners and community development partners, when we'd start off in those neighborhoods, we might be able to get vacant lots for a nominal sum. And the first phase of the project gets built. We put up, let's say 100 units of affordable housing. Now we're going out to acquire more land. The vacant lots are contiguous to what we've just completed. They're not $500 anymore. Maybe they're $5,000 or $10,000 or more. And so with every phase of reinvestment, the entry cost to complete housing and other infrastructure, the costs just keep climbing and climbing, and you have to find that subsidy money somewhere. You know, is it going to come from the federal government, the state government, from the Ford Foundation? So that's all part of this process that's going on as we're in different parts of this 18.5-year cycle that goes on. And we're always trying to work against the trends of the upward part of the cycle. Any questions so far? Or comments? Okay, let me go on. So I mentioned that the cities once again started to look attractive. So beginning in the late 1960s, urban neighborhoods that had easy access to a city central business district, and they might have had an old but historic housing stock, began to attract what were referred to as urban pioneers. And later, speculators and investors came behind them. The urban pioneers would go into neighborhoods that were pretty rough, where crime was high, where public services were not, particularly good, and maybe they would buy an old warehouse and turn it into, an art studio. And slowly but surely, with the influx of people with these abilities, you follow them with small businesses, small restaurants. And that's when the speculators and investors begin to see the opportunity. And they come in, they acquire properties in large number and do extensive renovations and attract higher income households back into these neighborhoods. And all this leaves the longtime residents really feeling oppressed. They have no place to go. It's not like, the cities are building new decent affordable housing for them to move into when they're moved out of their tenement building, which once was, let's say, a Victorian home, and it had been 6 apartments for 40 years. And now it's being turned into a one-family home for a higher income household. And so that's where the whole term gentrification comes from, and community resistance to it. The National Low Income Housing Coalition, which monitors all of these issues in the United States, says there's today a shortage of 7 million rental homes affordable and available to extremely low income renters. And these are people whose household incomes are under 1/3 of the area median. And as this map shows, every state has the problem to some degree. Where the bright red is where the problems are most severe around the United States. And these are people, who are really in a distressed situation, who don't have any resources to move. The governor of Texas might give them a bus ticket and send them to Chicago or New York. But what are they going to do when they get there? And to think this is just a U.S. issue, Joe, when I was visiting British Columbia a couple of years ago, we were informed that the eastern provinces during the wintertime were giving bus tickets to their indigent people and sending them to British Columbia because they knew they could stay outside during the winter without freezing to death. But so governments have a way of dealing with the problem by pushing it onto someone else. Every year, Harvard University produces a State of the Nation's Housing Report. And this year's report indicates that 1 in 7 households pay over half of their income on housing. So think about that. If you're paying half of your income on housing, and Michael, I think you said last week that in the UK, there's a similar problem, if I'm not mistaken. So you don't have much left over for the rest of your life expenses. Food, clothing, medical care, all of that. This is where we are in right now in 2022. And there's optimism that the economy is still going to grow through this current recessionary downturn and keep expanding. And I just wonder how that's going to be possible. Looking at all the statistics that have gone over with you in the last 4 weeks. Housing expense, for example. Okay, here's a map that shows the 25 least expensive metropolitan areas to live in. And even in these places, this is again the least expensive, with mortgage interest rates where they are right now, you could not qualify to purchase an entry-level property without an annual income of less than $40,000. That's what it takes to acquire property in these communities. I mean, if you're talking about Philadelphia, well, there are certain neighborhoods that you might be able to buy a property in, but even in the lower income neighborhoods, there's a shortage of affordable housing. So this is a level of stress on our economy that is not being dealt with. It could only, in my opinion, it could only be dealt with if the federal government decided to really embrace modern monetary theory or imposed a really progressive rate of income taxation, or even corporate profits taxation, and put a lot of that money into affordable housing, both rental and ownership. Now, this is not to say that there isn't low-cost housing. It does exist. And here's a neighborhood where you might be able to get into housing pretty cheap. But these houses are in very distressed urban neighborhoods, or they're in isolated rural communities where the housing stock is essentially fully depreciated, and where there are few amenities and the municipal services are substandard. And in a neighborhood like this, much of the housing stock is absentee owned. This is what we found in Baltimore, looking at neighborhoods that look like this. The people who own these properties do not live in the city of Baltimore. They live in the surrounding suburban communities. And they charge rents to tenants based on what the market will bear. And that's, again, often 1/2 or more of the tenant's monthly income. Here's just a little bit of comparison of year by year, the inflation rate and the increase in home prices. Okay, remember that this is government calculated. So in any given year, property prices may be increasing or not, depending upon the overall market. But throughout this whole period, on average, it's 9% a year. And since a house is a depreciating asset, what is increasing? It's got to be the land. Not everyone adds an addition to their home or spends $40,000 or $50,000 on an extensive renovation. You know, you maybe do that every decade or so. So most of this increase is in land. So it's telling you basically that in the United States, land markets increase on average about 9% a year. And that's roughly equal to the average inflation rate. Joe, you're there you go.
Yeah. I put a link in the chat which supports your position. Professor Condon did a presentation at ESSS, and he showed from something called what's it called? Math. Well, it's in the link there.
Okay.
But it's an amazing math software that maps out. This is for British Columbia. It's .ca, and it's called Mountain Math. And you click on the particular link, and there's a whole bunch of links if you back up, and it shows you the price of the property and the price of the land, and it'll show you a map when you press on more. And the second part of my post was an article that he did that has a couple samples of how he used it to show that the price of land was a thing that was going up. The production costs had hardly changed. And so his data there perfectly supports what you're saying.
Well, Joe, you may or may not know this, but I think part of the reason why the statistics in British Columbia are so good is because a colleague of ours, Ted Gortney, once was employed by the province of British Columbia to help them put that system together.
Right. Yes. And we're lucky. I think he's here. Is he here tonight? I think he is.
Yeah, if Ted's on and he would like to join in and add anything to this conversation, love to have his comments.
He's not with us tonight, Ed.
Okay. Now, here's something different. Fast forward to the current decade and look at here, and you see that a median price property is forecasted to sell in 2026 for $708,000. That means half of them would be below that, half of them would be above it. So the median price of a property is $708,000. Now, they're not telling you if household incomes are going to increase by the same rate to make that $708,000 property affordable. My argument, and the argument of those who hold similar views, is that neither households nor the larger market can absorb this level of prices for residential properties and what's bound to occur with apartments and survive. Even if overall inflation is brought down, the cost to own and drive a vehicle will certainly increase as fuel costs climb, as will the cost of food, utilities, medical care, childcare, the use of cell phones and the internet, and other living expenses. So we're fighting inflation by increasing interest rates. And again, that is helping some portion of the population, those who have savings to invest. But those people who are living paycheck to paycheck, they're not keeping pace at all. And their situation is getting worse and worse with every passing month. Will the United States government pass another piece of legislation bailing out that segment of the population? You know, will they approve something like a universal basic income? And, you know, I doubt it given, well, let me put it this way. I doubt it if the Republicans win the midterm election here in the US. If the Democrats win a majority and take control of the House and the Senate, it's a possibility. But a lot of people are going to be struggling over the next couple of years, and it's going to require huge government assistance to deal with this problem in any serious way. So I thought it'd be useful to just go back over these property market statistics a little bit, because I really want you to grasp what I think is the central importance of whatever country you're in. If you're monitoring the property markets, you are ahead of the curve. You're getting an insight into what's coming. One of the great stories that Phil Anderson tells in his book, The Secret Life of Real Estate, and I think that it's very true, is that if you look in any city at when the newest, tallest building is about ready to be complete, you're basically at the point where the crash is about to occur. Why is that? Well, think about it. It takes about 7 years from land acquisition to getting all the permits to get the construction done and the building completed and ready for occupancy by tenants. And if the developer has acquired the land 7 years from that 18-year peak, then they have paid a huge price for that land that they now have to try to recapture by whatever rents that they're going to get from tenants. When that building is completed at the end of the cycle, more likely than not, they're going to find themselves with empty space for quite a few years thereafter. And just an example of how that can work when you're at that part of the cycle. The Empire State Building in the United States, which was the tallest building completed at the time, completed in 1939, did not turn a profit until 1951. Of course, the Second World War had something to do with that, but and this is just an indicator. If you've never read Phil's book, I strongly recommend it. So here's a chart that looks at property prices, and just since the 1960s. In 1963, the median price of a residential property was just $18,000. And the average land cost comprised about 19% of the total, or $3,400. 10 years later, the median price had more than that, not quite doubled, $32,500, which was an 80% jump. And the land costs went up to $7,000. So there is a doubling of land prices in 10 years in the United States. Then we get into the years of stagflation, okay? And in the 70s, some real estate markets crashed. The oil belt of the United States, Texas and Oklahoma, experienced significant property value declines, particularly new construction. So early in my career, I was sent down by my company to a second home community outside of Houston, Texas, that had gone belly up. The developer had purchased this huge area, was going to build all these second homes for people. And when I got there, there were a couple sportsman sheds. People were fishing and hunting in the area, and the greatest population I found was mosquitoes. So there were places like that all around the United States, where overbuilding occurred, and there was this exuberance, and it just, the markets just crashed when the oil industry ran into its major problems. So there was a serious market crash in New England. The national median price in 1993, however, had climbed by that time to 126,500. New England had a downturn separate and distinct from other parts of the country. And for a long time, this was the characteristic of real estate in the United States. There were separate markets, and people thought, well, if it's not booming in the Southwest, I'll invest somewhere else in the US and they'll be booming there. But eventually we finally got a national market. By 2003, the median price of housing had climbed to 195,000. That's 10 years to go from 126 to 195. And appraisals on properties with older housing units on them were coming in with land values that were a half and more of the total. So you'd look around, a lot of neighborhoods, and you'd see the housing that went up, let's say in the 1950s, would be single-story ranch-style homes, kind of sprawling out with maybe a garage on the side, and it might be on an acre of land. So by 2003, that home is sitting there on that acre of land, and the house is almost fully depreciated, and the property price is $300,000. So basically, a developer comes in, pays $300,000 for the property, tears down the house, and builds a McMansion on it. And that we see all over the United States in these older communities where people had large building lots with relatively modest homes. In response to the rising prices, of course, lot sizes fell, and they've continued to do so in response to the escalating land costs in at least the high demand markets. And developers sought variances to get more intensive zoning, so they could put up more units per acre, or they tried to get permission to construct multi-story condominiums, often in the face of strong community opposition. You're sitting there in a neighborhood in your single family detached home on a quarter-acre lot, and behind you is a large parcel of land that the developer wants to put a 20-story condominium up and destroy your view of whatever it is you have a view of. So there's all kinds of community opposition to that kind of more intensive development. And what it leads to, again, is sprawl. And what does sprawl do? It creates enormous speculation opportunities for investors. If they know that there's a difficulty getting zoning changes to build more density development close in, then they can afford to speculate on farmland and be pretty sure that when the development pressure occurs, that they'll be able to get the variance from agricultural to residential or even commercial land. So all this is going on right now, all around every city and within every city in the United States. The other resistance that we have to development here is people do not want poorer people living in their close proximity. So there's a lot of resistance to what would be called restricted housing, meaning housing that's restricted to households with lower incomes. Some gets built, but it's really difficult to do. And one result of this is that the adult children of residents often have to leave the community in which they grew up in order to find affordable housing. And again, contributes to sprawling development. So you have neighborhoods where most of the single family detached housing is occupied by empty nesters. You know, people whose children have grown up, maybe gone away to college, came back for a couple of years and mated and started a family, but there's nowhere in the community for them to live that they can afford. And so they're on the road every day, maybe an hour each way to commute from their job to their home. And we push up land values at the same time, and we eat up our close-in agricultural land. It almost defies logic when you think about it, but the all-powerful dollar tends to rule the decision-making that occurs. And so the fuel that fuels the economic cycle, it just keeps being reinforced over and over again. Take a look at this, circle. This is an important observation. This is the way things should be done. We ought to have comprehensive community planning, but there's a lot of resistance to it. As population and economic activity of a community increases, what also changes is the highest and best use of locations. So at some point, a continuation of large lot, low density development no longer makes economic sense. And developers see this, but again, they run into all sorts of community resistance. And so for them, often it's to take the path of least resistance. Okay, if I can't build where the population is, I'll go out further and I'll build out in the fringe where there's less resistance to what I want to do. And what I know from decades working, trying to support affordable housing, is that creating communities requires exactly what this image suggests. It requires that everyone has a stake and everyone has a say, so that the decisions that are made, make sense for the whole population. When local governments and residents oppose new development, developers do this. They keep moving out. I don't know if this is happening as much in Canada or Australia or the UK, but you can see this, everywhere here in the United States. Developers just keep moving further out into the more rural areas where land can be acquired at a cost that allows an acceptable profit. And what they hope, of course, is you got a major roadway coming through. If the roadway is coming through, that means there's interchanges, there's opportunities for commerce, and there's opportunities to attract people to move there. In the close-in suburban areas, remember what I said about that 1950s or early 60s home on an acre of land? Well, it gets torn down, and this is what gets built. And with these homes and properties selling for several millions of dollars, now you're forcing out some of these other people because their property is getting reassessed, and perhaps they're retired, perhaps they're now on a fixed income, and they had no choice but to sell and move out. It's a market. What else do I want to tell you? Well, when zoning densities can be changed, gated communities are often constructed. This is a frequent pattern here. People are isolated by household income. So in a gated community like this, you're not going to see a segment of it set off for lower income households and affordable housing. The whole idea is to keep everyone who isn't an owner out. And we're seeing this more and more. And it also has the implication that the homeowners fee that homeowners pay every month goes considerably to maintaining the community's infrastructure. And so roads within the community may not be dedicated. So the people that live in there, they don't get the benefit of a community snowplow. They would have to pay for private company to come in to clean the snow out in the wintertime or do other kinds of maintenance. But people are willing to pay for that. What makes the most sense, well, what is often strongly resistant again, is rezoning to permit the construction of stacked units, because people just often would rather live in their traditional style of home. They're fine with having the high density, but again, it's just the pattern of what happens because land prices are allowed to escalate the way they are, and that the effective rate of taxation on land values is generally low. So let me stop there. You've been very patient while I go through this whole housing story. So any comments? I'd be interested to hear, what you have to say, Michael or Joe or anyone who's on from Australia about whether or not what I've said about the United States is pretty much the same where you live.
Yeah, Scott here in Australia, very similar. What we find that it's probably more driven on the coastal areas for lifestyle at this time.
Okay. What is the median price of a property in, say, Melbourne or Sydney?
I'm in regional New South Wales, so that's probably where I focus my attention. But you'd be looking at about $1.3 million, I'd imagine, in each of those capital cities.
Wow.
Yeah, it's around $1 million. My mother's house is valued at 1.9 million, and it's just a Californian bungalow.
And so if the appraisal was done on that property, what do you suspect out of the total would be the land value?
Oh, probably 90%.
Yeah.
It's a very old house.
Yeah. And so, I mean, this is part of the issue. Do you want to force people who've lived in a home like that for 40 years out? And rising property taxes certainly do it. So does Australia's cities offer any, what we call a circuit breaker to property owners who are lower income? What I mean by a circuit breaker, for example, is let's say your mother had an income of $30,000 a year. She could apply to have her property tax payment capped based on her income, and what she didn't pay but owed would accrue as a lien against the property when it's sold.
I don't believe there's anything like that, no. But my mother's been dead for 20 years. My brother and I own the property, but we thought that they overvalued it, and we asked for them to reassess it, and they knocked $100,000 off a couple of years ago, but they put it up again.
Yeah.
So we're back to square one.
Yeah. Michael?
Yes, I've been down to Worthing, which is on the south coast today. My sister-in-law has got a house, which is basically a double-fronted house. Originally, it's been divided into two flats. Now, each of those two, and so it allows for a garage they can both have a garage either side. It's quite a large plot, but it's the price for that is about 250, 300,000 pounds for each flat, one above ground, one on the first floor and one on the ground floor. Now, come back to London. I look across the road from where I live in Peckham in southeast London, and there are no individual separate detached plots like that in our road. They're all adjacent to each other. It's like a complete back-to-back housing all the way along, and a house divided 3 floors. You know, it gives about 3 bedrooms. Now that's going for about 950,000, but a single part of that house, say the basement, is going for 350 to nearly 400,000. So you've just got 1 bedroom, and almost standing room only in comparison. Whereas down in Worthing, which is it's about 60 miles away on the south coast, much nicer area, nicer road, but and the market rate's about 250,000, a lot more space. So eventually that's going to be, I don't know how long it will take, but when the pressure of housing gets such, those sort of plots, you would have to knock the houses down and build a block of flats there rather than a detached house divided into 2 flats. A lot of the houses in that road are detached houses, but they're single, and 1 or 2 of them have been over the years. In the 1970s, they've been turned into 2 flats. But so eventually that process will carry on. So eventually the house gets demolished. It will have to get demolished. I don't know what the life cycle would that to be. I would think about 70, 80 years, and then the whole site is starts to be reallocated.
Yeah.
So that's the price. So in Worthing, it's a single bed flat or 2 bedroom flat is about 250,000 in Worthing. In this street, a 2 bedroom flat is about 400,000. And it's not happy. I mean, you can look into the bedroom from my side of the road to the other side of the road, and there's a road down the middle with a bus running down, etc. So, I mean, I'm quite happy living. I'm a Londoner basically, and I've lived in that situation all my life. You know, where I was born in Edmonton, North London, near where the Tottenham Hotspur football ground is. All the houses I lived in were demolished years ago, and what happened? These back-to-back houses then became blocks of flats. Now, and no one really, they're not very nice because they're just blocks of flats with a bit of grass all around, and you've got no back gardens or anything like that. So the whole thing, I think what you were trying to say was there's a fast forward, the sites become used differently, and you have to make a dramatic.
Well, the point what I'm trying to get out of you and out of our Australian friends is a little bit of the story of how communities respond to demand and need. So, you know, for example, in the United States, there's a use of what we call eminent domain, where private property can be taken for public purposes. Now, there's been a lot of controversy about that, but one of the better public purposes is to construct affordable housing units for people. So I mean, we have all these band-aids, but they have in recent decades have been less and less effective. That's what I'm getting at. And it sounds like whatever provisions you have under law to increase the supply of decent, affordable housing for people are becoming less and less effective. And if that's a political, that's because of politics and which party is in charge of, you know, Parliament. That would be an interesting discussion, you know, as well, because that is consistent with what's happened in the United States.
Well, the way I see it is, what happens is you get less and less for at an increased price. So you become where you could live with a bit of breathing space around you, a bit of
Well,
space.
as I said, in the United States, if you do not need to work, if you have sufficient income that you don't need to work, there are plenty of places to move to that are inexpensive and that are still, good places to live. But if you need to work, then you're really captured by the property markets. Victor, I see your hand up.
Yes, well, you did get my email, right, on Monday?
Yes,
Okay, so Monday was what they call Labor Day.
yes.
It was a holiday. And I sent a newsletter out to a couple of thousand people. And the subtitle was, why not call it Oligarch Victory Day?
Yeah.
And the first line of it was, master and slave are two sides of a coin. It's the same with oligarch and worker. President Carter called the United States an oligarchy, and Tom Hartman wrote a book about it. It's a pejorative term meaning rule by a small, corrupt group that is not responsible to the many. For Plato, oligarchy was a degenerate form of aristocracy, just as tyranny was the corruption of monarchy and mob rule, corruption of democracy. To understand when the US Republic failed as a start, see Requiem for the American Dream. It's a 63-minute film. I give the link to it. You could watch it on YouTube for free. And it's narrated by Dr. Noam Chomsky. He's a top scholar, over 100 books. And anyway, his analysis is about the vast inequality in the United States, greater than it's ever been. So
yeah, I absolutely agree with you. And what I would say, I agree with you there, this oligarchy exists. One of the things that has been said about the United States, one of its desirable features in terms of our governance is that we have so many individual levels of government. And so we have all these competing levels of government, but it's very difficult for even our federal government to get control of the states, and then the states to get control of the counties, and the counties to get control of the townships, and the townships get control of the towns and cities. So there's plenty of opportunity for competition of ideas within the oligarchy, in my view, and for actually getting some things done. So in my professional life, we were always looking for best practices in different cities. And so when you're talking about trying to get investment back into communities to clear out these neighborhoods that are struggling, even in a time where there's a recession or high interest rates, there's always community leaders who focused on that, and you could find partners to work with. Maybe that is the hope of this republic.
well, can we agree that the problem is inequality?
Yes.
All right.
And the problem is inequality caused by privilege.
Okay. So I grew up in New York City and for a time lived in the same neighborhood as Donald Trump. So I'm a bit familiar with the issue. And to me, the solution is not in taxation of land, but in eliminating the oligarchy. For example, by restoring the tax rates that existed under Eisenhower. They got up to 90% progressive. Until you remove the oligarchy, I don't see any smaller solutions. And as far as the states' rights, states have no rights. Only people have rights. And that issue was solved with the Civil War.
Well, toward the end of this course, come back after I come back from my trip to Germany, and we'll get into some of this, Victor, in a more specific way, because I do agree with you that the changing the source of public revenue is not an absolute solution, but it is, in my view, arguably essential if anything is going to be permanently solved. That's the issue. And then you have all these other things that have to be dealt with. You know, the Electoral College, amending the Constitution, all sorts of other, other issues that are political, as well as related to taxation in terms of how progressive is our tax system really, and what's wrong with it the way it is currently constructed. So there'll be a lot of room for that discussion when I get back from Germany, and we'll be in that part of the lecture series. So,
Okay, I was born in Munich. You've been München geboren. And let me just leave you with one question.
okay.
How is Hitlerism different from Trumpism and from Bushism?
Well,
A topic for longer discussion. To me, the solution is getting rid of the oligarchs,
yeah,
not property value.
yeah.
I can't wait till the end of the series. Thank you for all you do.
Okay. All right. Well, we know what you'd like to see done, and
Okay.
the question is, how do we get there? And I guess I'm an incrementalist. Somebody else had their hand up and left. Keith.
Yeah, a very good series, Ed. I just wanted to say I just finished watching a 3-part series called Commanding Heights. You've probably heard of it, but when you're talking about the oligarchs in Russia, they bought Russia's industries for an absolute song.
Yeah.
Industries that had a $2 billion a year turnover, they bought for 140 million.
Yeah.
And it's unbelievable. You just wonder how they got away with it. But that was what happened. That's all I've got to say. But it was a very good series. It's sort of given me a lot of good information.
Well, what happened in Russia is tragic, but there's a lot on our side of the scale that needs to be addressed as well, because there are many analysts who suggest that we in the West hold a lot of responsibility for what happened in Russia and the rise of Vladimir Putin. So that's for another day, and for some other discussant to lead that conversation. Joe?
You were asking about the housing situation in other countries.
Yep.
So in Canada, one of the factors is the high immigration rate. I think officially, the United States has about 0.3% immigrants per year of the population. Australia has about 0.6%, and Canada has about 1%. So that means you have to build a whole lot of residences just to accommodate people coming in.
Yeah.
And that's a lot of pressure on assembling land. And our developers here are very savvy at acquiring land and then getting the zoning changed. And suddenly the land doubles or triples, right? Because the zoning's changed.
Of course, yeah.
So I would say Canada's had the worst record the last few years. Although the prices sound pretty similar to Australia's. We also have a large number of foreign students coming in, and a lot of them have moneyed families, and they're buying residences up. We have a problem, I think, with kind of money laundering, where our rules aren't as good as they should be. And housing, again, is used as a way of laundering. So there's a lot of, there's a whole bunch of issues, and there are some measures being tried, but what you've described is even worse in Canada, generally speaking. And
what I'm hearing from you and from everyone else who's spoken basically is the differences between what's happening in the United States and other countries is a difference of degree. The same dynamics are there, and they may be more advanced or less advanced based on overall government policies and the general other demographics that occurred. The immigration that you just spoke about, and the same thing in Australia, I would assume. Again, you're talking with a lower population, and the extent that your revenue source comes from the taxation of income, that would seem to me to be much less available for social policy than in the United States. But on the other hand, you have all this rich natural resources. And so the question would be, from a revenue standpoint, for social policy purposes, how much in terms of royalties or land rents, if you want to call them land rents, is Canada getting, is Australia getting, is maybe even the UK getting on its remaining North Sea oil? How much of that revenue is going into the public, budget in order to cover these increasing expenses? I'm not asking you to answer it. Those are just, questions that I would raise to identify the differences of where each country is in the economic cycle right now, and what the prospects are that when we hit 2026, that would be a moderate or a severe crash. For me, the data is telling me that the United States, the crash is going to be enormous because of all of the debt that is being carried by individuals, and the enormous price of property that people have had to absorb. Just to give you an example, does anyone else have anything? I didn't want to cut everybody off before I move on. Anyone else I missed? Okay. All
Yeah,
right.
just quick. It's
Yeah.
Scott here in Australia. I've been following Philip Anderson for a number of years. He's been very good, very differential for a lot of people in the way they think. So 2026 should be where we are in the cycle. So yes, I believe that's correct. I'm just concerned if it comes a few years earlier, because there are a lot of people with a bucket full of debt, that if interest rates rise, and they're rising rapidly around the world, it's going to come to a crunch, and hopefully it doesn't come too early. But I can see it being massive at some stage. On what you spoke around a few minutes ago in relation to land and land prices, yes, it's been rising. It's based upon availability. We talk, all sides of politics talk about affordable housing, but unfortunately, when it comes to council approvals, etc., it doesn't relate to the general man in the street being able to achieve those sorts of things through the council approval process. It takes so long. So as much as Henry George is probably right in what needs to happen, if it's going to happen, I struggle to see it, because the people who are at the top area in politics are a lot of our vested interest with property developers. So it's going to be a big challenge to change that, because the people who make the rules are some of our biggest property investors. Thank you.
Well, it sounds like, and maybe this is going to be the case in the United States. I mean, my thought is that in the United States, the Democratic Party, if it maintains a majority, is going to be more likely to support spending on the social policy issues than will the conservatives / Republicans. I would imagine that's similar in other countries as well. I mean, the Tories are going to have a very different view of what economic policies ought to be adopted in the event that they start to feel things are getting really rough, and that labor would have a very different point of view as well. So depending upon next election in the UK between now and 2023, the next election in Australia and in Canada, if it's left or right, that could be the determining factor of whether or not the crash occurs at 2026, a little after, or in the next couple of years. because I think my view is that the conservatives still hold to the basic old orthodox idea that the economy should be allowed to fall down to its trough and then recover on its own with the least amount of effort possible. And I don't think that, I mean, certainly that hasn't worked before. It's worked fine for the people that Victor was talking about, the oligarchy, because they're, most of the oligarchy have plenty of reserves of cash, precious metals, all sorts of investment opportunities. But for the households that have a median savings that is insufficient to carry them through the next 6 months, they're in real trouble without a very liberal government in place that's going to provide income support. So I will be monitoring the situation here in the U.S. On an annual basis between now and 2026. So I may do this again next year in abbreviated form, without covering all the fundamentals so much, but with an update on the statistics, just to see what has changed, if anything. Well, here's a chart that's kind of interesting to me. I mean, if you look at this, it says basically that almost everywhere across the United States, residential land prices have continued to increase since the end of the last economic cycle, with the highest increases in what are defined as core counties in large metropolitan areas. So again, sprawling development takes the development out to the county that surrounds a major city, and sometimes beyond that. In some suburban markets, the land to total value ratio for existing housing is on a regular basis greater than 50%. Doesn't sound high based on what Michael told us about some of his communities, but if you went to San Francisco or New York, large parts of New York City, you might see land to total value ratios of 80% of the total. And certainly in resort communities, it's that high as well. So here's a list of the resort communities in the United States with the most second homes. There's another part of our economy that has been booming and continues to boom. This is where a lot of new construction occurs in these counties that have second homes. And a lot of people use them as investment properties until they retire, and then they move to them, finally sell their homes, cash out, and move to Florida or move to some other part of the country where they can retire. But there are a lot of second homes right now that are being used for investment properties, and so people are getting cash flow from them at all, on a regular basis. With record low mortgage rates for so long, it was easy for people to carry 2 or 3 or even 4 mortgage loans because the rents kept going up from their tenants. And so this is a part of our economy. You can see that this is the counties with the number of second homes, and look at the number. In that county in Arizona, 109,000 properties are second homes. That means that most of them are probably unoccupied for all but a couple weeks a year. Some of them may be leased out. In New Jersey, where I live at the ocean, people own a second home and they rent it out to visitors to the ocean during the summer months, and it's empty from October until April. So there's a lot of money floating around that's being put into real estate, because real estate has been such a good investment that it's a safe harbor for your assets, as well as government securities and mutual funds or whatever. Victor?
You brought up counties. Now there are about 3,100 counties in the United States,
Yeah,
and they are vastly unequal in size.
yes.
Maybe you could say something about boroughitis, which started in around 1900, where they used the idea of borough instead of county. But my bigger point is, in Pennsylvania, for example, there are 67 counties, and they range in size from under 10,000 people to like 1.5 million in Philadelphia. So isn't this kind of an idea of why we're so unequal? Because we've kind of changed governments from equal representative districts to counties. That's my comment.
Yeah. We have a very involved system of governance in the United States. And depending upon where one lives, if you live in Philadelphia, you live in a city county. I mean, Philadelphia is a county. It has what is called a home rule charter. And not very many cities get a home rule charter. It has to be approved by the state legislature. And I don't know when Philadelphia got it. But for example, across the state in Pittsburgh is a small, tiny city geographically, surrounded by what Victor just referred to, these little boroughs, tiny boroughs that are self-governing, and so it is a messy. Regional government becomes very messy when you have that many entities sitting at the table to discuss where the next road is going to go, or utilities and all of this. But other than that, I don't know how to get into a discussion that's meaningful other than to say it adds a lot of, there's a concept in economics and in planning called the free rider principle. And this is very simple. It's great if you can get someone else to pay for something you benefit from. And so there's a lot of that kind of discussion that goes on in regional planning between boroughs and townships and cities and governments. And it means that you don't always get the best thing done for the residents of the community. But it's part of our system. And again, this has been operative. Victor said since 1900, it's been operative. And so for every economic cycle, it has, those characteristics have been there, and to some degree. And sometimes you get a really progressive, reform-minded mayor and city council, and they do something about it. They pass legislation. The question is, did the legislation that they passed and implemented, will it stay in place when the next mayor and city council come? If the party changes and a really good idea was put into place by the other party, maybe that new party, just on the basis of ideological bias, will scrap that policy and get rid of that law. This is politics. I can't be describing anything different than what's happening in everyone's locality. This is what your life, your government does and how they function. We need a lot of reforms, not just in the United States, but in every country, even those that are the most participatory and the most democratic. Joe, did you have something to say?
No, I just forgot to take down my hand.
Okay. All right. Well, it's 8 o'clock, so I don't want to keep you too much longer. I just have a one or two more things to cover, and then I'll stop lecturing and open it up for any discussion for the last 10 or 15 minutes, whoever wants to stick around. So here's a map of the United States, and it shows the percent of the housing stock allocated to second homes. And this is the point I was trying to get to. You look at this map, and in everywhere there's a major resort area, retirement area, there are huge numbers of second homes. And, you know, households are moving on retirement from their working lives. So they have considerable land equity that they're able to carry with them into the purchase of a retirement property. If they're a renter your entire working life, this is not you. You are not accumulating savings that will allow you to pick up after your working life is finished, if you can afford to stop working, and move somewhere into a retirement community. The National Home Association of Home Builders estimated in 2020 that second homes now accounted for 5.5% of the nation's housing stock, 7.5 million units. That means possibly there are 7.5 million units that sit vacant for the majority of the year. And if you remember back a while ago, I said there are roughly the shortage of affordable apartments is about 7 million. So we have all of these empty properties that are could be occupied, that have been built and taking up land, and no one is really spending much time in them at all. And that's one of the contributing factors we have to the problem, but it's also part of our economic system that here again, if we get into a serious recession, that's a big part of the construction industry that will stop dead. Okay. Because there's no essential necessity for people who haven't got a second home to allocate their savings, to cash in their assets in order to construct one or to take on the debt. And so that could be one of the triggers for the cycle to become seriously crashed, the collapse of the second home construction market. And I'll leave you tonight with just one other kind of statistics that I haven't really figured out how it factors in 100%. But all those statistics that I just gave you does not include more than 800,000 persons residing in assisted living housing. These are persons age 85 and older. Most are female, and most are non-Hispanic whites. So we have a lot of need. The demographics in our society are such that we need accommodation for people who are this age and not able to live independently. And we have a dramatic shortage of housing that's available for these people. And what are we going to do about that? That's going to cost an enormous amount. You know, I'll be 75 in January. Right now, I think I can live independently for a good many years, but you never know. Okay, we'll pick it up next week from there. And I hope that I haven't given you a headache, but hope that I've gotten you thinking a little bit more deeply about some of these things than you might otherwise be inclined to do. Any comments, questions? Anything you want to go over that I've covered that left you confused?
I do have one comment.
Yeah.
Second homeowners support the area that they have their second homes in. I'll
Yep.
give you one example, restaurants.
Yep.
When ski season's going on in Vermont, the people that own restaurants do extremely well. In the summertime, they struggle, but the second homeowners are paying higher taxes than the locals. So it doesn't really matter if their homes are vacant, because in the winter, they're supporting the restaurants and a lot of the other people that if they all moved out, Vermont would go belly up.
It's a complex, it's the second home community in a resort area, as you say, provides a lot of job opportunities when people go up there to ski. My wife and I used to ski a lot in Vermont. we didn't own a property up there, but when everyone who goes to a resort community adds enormously to the community. But if you look at locally, the people who work on the ski resort, the people who work in the restaurants, they're all commuting maybe an hour or more away because there's no affordable housing for them close by. So here again, it's supply and demand in a sense that the demand for the close-in property to the ski slopes or to the lake or whatever it is, that's the attraction, is going to drive up those land prices. And without the taxation of land values, as we've discussed, land prices will continue to be subject to speculation and be driven up and up and up. And at some point, even those resort communities find that they can no longer get workers because no one can afford to live in the area, and they move on elsewhere. So I mean, it's the point I guess I'm hoping to make is that we have to figure out how to implement the right policies so that communities can be have mixed use that's affordable for everyone who lives in those communities, regardless if they're 85 years old and fully retired, or are 22 years old and just out of school, whether they have a college degree or a high school education or a high school dropout. That's what a community is supposed to be. And we're not organized to support that kind of relationships between people.
Yeah, I agree. There's a Margaret Thatcher that said socialism works until you run out of other people's money.
Well, and the latest and what we hear all the time is that today we have socialism for the rich and capitalism for the poor.
That's probably true.
Michael.
I look forward to next week really about this, because social care is something I'm very interested in, and it's a very expensive time of life when you reach my age, and you're a little bit younger than me, Ed, but it's closing in, isn't it? And it's an expensive scenario. And one thing in this country, anyway, in England, if you own a property, you can, and you have to go into social care, that you have to pay for that social care yourself if you have a property, which sounds sound in principle, but if you haven't got any property, and then they has to be paid for by the community, etc. But if you have a property, you're duty bound to use up your asset property first. And that sounds just. It's like returning the economic rent you've accumulated in the past, but it means, because it's a very expensive business. I don't know but it's about £1,000, £1,500 a week to look after someone 24/7 in a community, in a care home, and it's an expensive business.
Well, the adult children of people who enter into elder care, they may feel like they're getting their inheritance is being taken away from them. It's the way we have reverse mortgage loans in the United States. I don't know if you have those in the UK, where you give up the equity in your property for a stated monthly income. And by the time you're ready, you're gone. The property is basically taken away from you, and there's nothing for your heirs. But on the other hand, you have an income supplement that you would not otherwise have access to. No. So yeah, I mean, the whole issue of fairness and how do we define fairness and what is fair, we struggle with that.
No, I agree.
Well-
It's a real dilemma, but it's one, certainly in this country, it's exercised in that our new Prime Minister, who's been elected yesterday, apparently social care and the National Health Service and how we can afford to pay for the increase in energy prices is in our in tray.
Yeah. Well, you have to wait till the next parliamentary election to determine whether or not that policy stands for very long, right?
Yeah, no, but it's you know, it's all these issues are we're in up to our necks, aren't we? And we've got to come to some understanding of them.
Well, for those of you in the UK, those of you in Canada and Australia, I just, I hope that over the next couple of years, more and more interest is exhibited in the ideas that we've been talking about in these lectures. There are opponents and advocates in your countries, and hopefully they'll be more effective. They are more effective than we are in the United States, at least at the federal level. Yeah. Keith, I think you're next.
Yeah, in Australia, there's what they call a RAD, a refundable accommodation deposit, and if you've got your own home, you have to pay it, and it's between 600 and whatever, 800,000, maybe $1 million, right? But it's refundable. So when you die, it's refunded to your estate.
The
So
whole
you get
thing?
that back. Yeah, the whole thing. Yeah.
Wow.
Yeah, but then you have to pay. You have to pay a daily accommodation, $50 a day accommodation payment. But the bond is refundable. That the other thing, why I actually put my hand up was I read in the other day they did a survey of federal politicians, and they found that there were more politicians that own 5 investment properties than there were that own none. So there's no incentivization for the people that make the laws of the land to drive property prices down, because they're the biggest property investors of the lot.
Yeah. Well, I don't know if this is a workable long-term strategy, but as I think about all these things and how to approach politicians and how to approach my fellow citizens, the emphasis that I have come to is to explain to people and try to get them to think about the fact that their housing unit is a depreciating asset, just like their car, just like their computer, their television, their telephone, their lawnmower, whatever. And does it really make sense to tax the depreciating asset that is probably the most important depreciating asset you have? If it makes sense to tax your home, then we ought to have an annual tax on all those other assets. So government ought to, send you a lawnmower tax every year, and I make that argument to show how ludicrous it is. And so, well, once you get past that point, then you say, well, then think about the land. There's something different about the land. The land doesn't depreciate, and you don't have to maintain it. You don't have to, repair it all the time, or every 10 years, if you own a house, you have to put in new heating and air conditioning and your roof and all that. So that's kind of what I've tried to do in discussing tax changes with people who have an interest in keeping the status quo because they own a residential property or more than one residential property. Victor. We can't hear you, my man. You're on mute.
There seems to be an agreement that we have on Requiem for the American Dream. Have you seen? If you've seen The Corporation, it's my favorite documentary that has a lot of solutions to the problem. It's again, made in Canada. Another good one is manufacturing consent, about how the oligarchs manipulate us. So I would recommend those two. They're both Canadian, by the way. So a lot of good things coming out of the neighbors up north. But I did want to make one comment. There are 15 Commonwealth realms, 15. And I think 90% plus of the people live in like 4 of them. Canada, New Zealand, Australia, Papua, and United Kingdom. Those countries, as far as I know, do not have a real written constitution. So if I wanted to go to Canada, I would have to swear allegiance to the Queen. Their military, their political leaders have to do that. Now, yes, they have some sort of written document, but they could change it almost from week to week. My point is that we have the advantage in the United States of having a document to which our politicians swear allegiance to. So, for example, in the case of Thomas Paine, who we both admire, he said that corporations, charters, the idea of corporate charters do not give rights. They take rights away. If we approach the issue in that way and look at the charters that have taken away the rights of citizens, we could change them for any reason or no reason because they had no right to begin. And that seems to be a simpler solution than tax policies at the local level. All I'm asking you to do is consider watching the documentary, The Corporation. It has 2 parts, and maybe comment on it in the future.
I think I have watched it, but I don't remember the details, but I am writing it down and I will watch it.
Well, the first part is free on YouTube. The second part has a whole list of like solutions to the corporate problem. So I would very much appreciate your feedback on that. The manufacturing consent is like 28 years old now, but it still shows how public opinion is manipulated. Thank you. That was great. Thank you.
We have tremendous challenges, do we not? And it's encouraging that that 30 or so of you have chosen to spend some time with me to kind of air some of the issues out, and particularly, those of you who aren't here in the United States, sharing our particular challenges at the moment. I hope this is being somewhat, I hope it's being valuable to you. I'd love to see some other people do the same kind of analysis for your own country. That would be great. I'd love to hear someone do the same thing for Canada and the UK, Australia, and other countries. That would be particularly informative and interesting to me. Charlie, I see you got your hand up.
Edward, thanks for doing this again. I actually feel very privileged to have all this experience and knowledge, being having access to a platform to be able to learn from you guys, so I appreciate that. But my thinking at the moment is more so on just something sticking in my head as to a guy that I follow. He's very high IQ. Yeah, I went to one of those geniuses schools and said he was surrounded by a lot of smart people with a lot of knowledge, but the issue was sort of putting that knowledge into practice and putting it to the ground and actually actioning that knowledge. So my question will be, so I've hopefully got many more years ahead of me. I'm 33 years old, and I would love to make a difference. How do I apply this knowledge to make a difference? Like, what is the first step for someone to be able to make these changes and use what we all discussing to make a difference in the world?
Well, everyone, I imagine there's still 28 of us on here. It might be 28 different, or 27 since you're one of the 28, 27 different answers to you. But the mantra of activists has always been think globally and act locally. That's not always easy to do, as Victor has been discussing. you know, I've been very much involved in the United States on property tax reform issues and tax reform issues generally. But I've also joined a team of people that was organized by a British colleague named Fred Harrison, that some of you know, that went to Russia when Boris Yeltsin was the prime minister or premier of Russia, and they were going through the early stages of privatization that resulted in the oligarchy. And we tried to, you know, convince them that they should not go down the same path as the Western democracies in terms of their economic system. And we totally failed. We won some supporters, but those supporters never made it, you know, into the regime that succeeded the Yeltsin regime. So I don't know. I mean, everyone has your own constituency. I was fortunate enough in the sense that I was in the financial sector and working in an area of the financial sector that was focused on community revitalization and increasing the supply of affordable housing. And when I came to understand the importance of the role of land markets and tax policy as it applied to land markets and how it affected a housing sector, I brought that voice to that discussion. So whatever you're doing at age 33, you have a constituency. And so, you know, try to be involved in local community activities that are focused on improving the community. It requires, you know, political involvement is difficult. I've been involved in a couple of different political parties and political campaigns. I served as the state issues chair for the Green Party in the state of New Jersey for several years, and eventually gave up because the Greens just can't find any constituency. You know, there's 4,000 people registered Greens in my state, and that number has been about the same for 15 years. So
Do you think there's a demographic issue there? Like, because a lot of people I speak to, like especially my age or around there, have absolutely no idea about, you know, the things I'm starting to learn now. And even people, you know, substantially older than me still have no idea. Like, I can't even have a conversation because they just don't know what I'm talking about. So, you know, it could be part of the issue lying there.
Yeah, I don't know. Each one of us has our own opportunities, and you just have to, you know, try to take advantage of opportunities, become involved. I mean, volunteering to help other people with their objectives can often, if you believe their objectives are consistent with your own ethics and your own morality, can open doors for you, because, you know, it's amazing what the talented people you've come across in your life. That's all I can say is I've always volunteered in different organizations, and that's always opened doors for me to, you know, discuss important issues with people and get their support in some extent. Maybe someone else has wiser words than I've been able to provide. Well, this group sounds silent on that. So I think with that, I'll let Ibrahim go for the evening, and we'll call it a night. But really great, a lot of great discussion. And I look forward to us spending the next week together, next Wednesday. And then I will be away for 2 weeks, and then we'll finish up after that. So until then.
Thank you very much, Ed. Thank you everyone for coming. We will meet again next week, same time, 6:30.
Good night, all.
Good night.